possibility of a stock market crash during the Donald J. Trump presidency, and Buffett's cash pile. Today, I read an interesting article on Yahoo Finance, put out by the Motley Fool and written by Sean Williams, titled, "How Likely Is It That the Stock Market Crashes Under President Donald Trump in 2025? Here's what history tells us." According to the author, on January 20th, Donald Trump is inheriting a pricey stock market. The author went on to say, as of January 8, the S&P 500's Shiller PE ratio stood at 37.58, which is more than double its average reading of 17.19 when backtested it to January 1871, and the third highest reading during a continuous bull market. There have only been 6 occurrences in 154 years where the Shiller PE has topped 30, including the present and the previous 5 were eventually followed by declines ranging from 20% to 89% in the Dow, S&P 500, and or NASDAQ Composite. Lastly, the Buffett indicator hit an all-time high in December. Here are my thoughts. There's one thing that I've experienced during my lifetime. The market can defy logic for a long time. Stocks can continue to rise to extreme highs. Greed is a powerful emotion, and there has been a lot of it in our world in recent years. Will we ever see a correction or crash? It's certainly possible. A black swan event could come out of nowhere. Central banks around the world may be able to intervene and contain it like they did in early 2020 when the market tanked. Could their intervention attempts fail? That's always a possibility. One thing people need to consider is how creative central banks can be. People also need to consider how creative Donald Trump can be. During his last presidency, he would tweet or come out in the news and say something, and the market would take off like a rocket ship. With all that said, you do have to wonder why Warren Buffett, one of the greatest investors of all time, has his largest cash pile of all time right now. You also have to wonder what type of problems we could be in for down the road due to all of the debt that is out there. Getting back to the article, the author said, Republican presidencies and recessions have historically gone hand in hand. Here's an interesting bit of information. There have been 10 Republicans and 9 Democrats in the Oval Office since 1913, whereas 4 Democrats didn't have a recession begin under their tenure. All 10 Republicans endured a recession while in office. This includes Donald Trump, who navigated America through the 2-month recession that occurred during the pandemic. My friends, this is interesting historical information. I have to wonder what that recession back in 2020 would have been like if trillions of dollars had not been injected into the economy. In a way, we kicked the can down the road. If we do experience a recession or a depression under Donald Trump, I don't think your average American is prepared. I don't think some business owners who are levered up are prepared either. Many rely on lines of credit, which have gotten more expensive during this higher interest rate environment. Some won't know what to do if banks reduce or close their lines of credit. That happened back in 2008 and 2009, and many businesses ended up closing because of it. There were over 2,500 comments beneath this article. I'll share some of them with you. The first commenter said, "The euphoria on Wall Street following Trump's win has been followed up by the realization that his policies are not economically sound, and the gains have almost been fully erased. Even if he walks away from the tariffs and does not start wars with our allies as he has threatened to do, all his chaos instills corporate uncertainty. Uncertainty is deadly to the growth of companies. They have to allocate resources to big plans and changes that may or may not happen. We've already seen mortgage rates, which are essentially futures on the bond market, go up since he was elected. Expect more. Stinks for me is I have an arm on a construction loan, having thought once completed I'd be able to refinance at a fixed lower rate. There's just no sign I'll be able to do that now. The next commenter said, during Trump's first term in office, the Dow Jones, S&P 500, and NASDAQ Composite soared by 57%, 70%, and 142% respectively. What are you people talking about? Trump holds 15 of the 20 largest market drops in history and holding the record of dropping 2,999 points in one day. Under Trump, my accounts rose 5.8%. Under Biden, my accounts rose 28%. Same investments. After Trump's tax cuts, the market dropped 1,000 points when the new trading year opened. Those tax cuts were Trump's only financial policy. Tariffs were disastrous, leaving the U.S. government to fund U.S. farmers billions in a socialist program because China stopped buying their crops. Not to mention our recyclables. Then there's Trump's new NAFTA that through the three-power grievance board lost American companies 18% of the car parts market to Mexico and Canada. Are you guys talking to Murdoch's Wall Street Journal? Because it sure sounds like it. The next commenter said, Trump supporters were giving Trump credit for the Dow jump right after the election. They called it the Trump bump. Well, today, the Dow is below the day before the election. Those Trump supporters are nowhere to be found now that there's a Trump slump. The last comment that I'll share with you came from someone who said, seems like we are about to redo the 2000s with a free spending Republican president wanting to put everything on the national credit card. Trump certainly didn't want a cap on the debt. He does want another tax cut for those needy billionaires. He is also riding on the euphoria of a stock market that is spinning out of control. Back then, the dot-coms. Now it is from AI. Hopefully, he doesn't start some wars to make personal profits off of like Cheney and Rumsfeld did. Well, my friends, these commenters always have interesting things to say. Please keep in mind, these are the thoughts of the commenters and not me. What do you think about all this? Share your thoughts in the comment section below. Here's another interesting article about the stock market. I read this on ZeroHedge.com, written by Tyler Durden, titled, Buffett is Worrying, Should You? According to the author, Warren Buffett's company, Berkshire Hathaway, has about $325 billion in cash, accounting for over a quarter of its portfolio, the highest percentage in over 30 years. The question begging an answer is, what is worrying Buffett? We believe the answer is valuations. Warren Buffett's preferred market valuation metric is the ratio of the total stock market cap to GDP. The ratio stands at 230%, 2% below the level when the market peaked in 2021, and well above 175% in 1999. Well, my friends, this is interesting information, but there's no reason why we can't see this go higher from where it's at. Irrational behavior in the market, supercharged by greed, is an interesting phenomenon. What's concerning is the author's reference to 1999. We all know what happened after that. The dot-com bust was brutal. It wiped out a lot of people. People I knew personally were about to retire and had to postpone their plans for over a decade. That's how long it took some of them to recover. Let's hope we don't see a drop similar to what we saw back then. I can't imagine how that would impact some Americans, especially retired people on a fixed income who depend on stock market returns. Warren Buffett appears to be fearful while others are greedy. Let's see how this all shakes out for people who right now are being extremely greedy. What do you think about all this? Share your thoughts in the comment section below. If you enjoyed this video, consider subscribing to the channel. I want to extend a special thanks to everyone who has subscribed to this channel. I want to also thank all of my channel members. If you would like to become a channel member, there is a link in the description beneath this video. You can read more about the different membership levels. Please also check out some of the great books I suggest you consider reading in the description below. I've included Amazon affiliate links to these books. As an Amazon associate, I earn from qualifying purchases. Stay healthy and wealthy. I'll see everyone in the next video.